Hey, folks, thanks for joining us today to figure out how we do that slogan that I have. One application, one credit pool. We're going to compare your loan to over 30 different lenders. So Alan and I, like I said, we come in each Wednesday to kind of show you guys exactly how we do it. But this was a great article that came up this morning. If you could check in, double check the date down there. A surprising share of homeowners have high mortgage rates, and here's a breakdown. So the perfect person to talk to on this is right up through there. He talks to probably 20 people a day, and Alan usually runs most of the loans, most of the lending here. And so, Alan, you could probably chime in on this. We'll get to you guys in a second. So if you're here to figure out what kind of interest rate you might qualify for, we got some tools for you also to help out. So, Alan, I know last month you ran some numbers and you came to me and said, our average per refinance, they're saving like X amount on the rate and X amount in dollar figures. What was last month's? What's it look like last month on savings wise on refinances?
Yeah, from last month's numbers, I think we were like right around 1.3% lower in rate than what they currently had. And I think the average savings was around $500 or $470, somewhere in that range.
Yeah.
They were larger loans.
And this article, I just sent it over to Alan. He's right down the hall from me, but I just sent him down there and I'm like, dude, this is right in the wheelhouse of what we want to talk about today. So if you know somebody at work, your brother, sister, aunt, uncle, mom, dad, if they got a mortgage, please just interrupt them at one dinner and just say, hey, what rate are you paying? And if they say 7, just say, hey, can we talk? Or can I send you a video? And then send them this video. Okay, so here's what we want to look at. What are rates doing today? But we want to talk to those homeowners out there really about refinancing, because that's kind of what we're looking at today. So we're going to go over some of the captions. I just want to get our kind of all of our stuff in a row right now. So let's do some tidy keeping right now. Mortgage rates today, not really doing anything. The government shutdown didn't last long. Here's an obstacle we're going to face here soon. Oil prices are jumping. This is terrible for inflation. But the biggest thing I want to do is go over and show you guys a lot of calculators that we're going to give you guys access to for free. We're going to give you a code today to use these things. So, Alan, let's get over to probably the best thing for us to talk about in today's video. What are you seeing? What is an average person looking like when they call in and they have a mortgage rate? Now, if you guys have a question for us, some specifics you want us to kind of dive into, let us know. We'd love to give you a kind of a rate quote right here online, but our goal is to show you kind of behind the scenes on how we do it.
Yeah, I mean, the average right now is, from what I've seen, are people that have a loan that they probably took out about a year ago, maybe a little longer, at around 7, low 7s. Great credit. They're in a great position to refinance. The most time I'm seeing is we're getting them down at least a point lower than what they currently have, with a time to recoup usually under a year, if not sooner. And that's critical, because typically you want to have your recoup time, the time it takes to recoup the cost involved with the refinance to be under 2 years. And I'm seeing anywhere from 8 to 10 months on average, which is fantastic.
And the 2 years is the Dave Ramsey rule. So if Dave Ramsey agrees for it on a 2-year recapture, 1 year is unbelievable. So if you follow Dave Ramsey, but this is the tool we're going to show you guys later on in this video. We posted it. I'm going to show you where to find it. You can actually get it for free. And it's basically just going to run down. You're going to say, okay, here's my scenario. Here's what I can refinance at. And we can run your numbers right here online if you guys are here with us. And then we're going to show you the difference, how much you save, and we'll break it down for you. So if you guys have any scenarios for us, let us know. But Alan, let's dive into, we get a lot of, I know it's in the middle of the day, so we get a lot of people here that join us in the evenings. So check this out. If you missed us, and we're going to have, down below and stuff like that, you can reach out to us, schedule appointments, and do such. So Alan, until somebody really comes on and gives us some thoughts here. What's a good scenario that you had this week? Maybe we can look at somebody that has a conventional loan, then an FHA loan, and then a VA loan. And then you can explain, if you have an FHA loan or a VA loan, it's like crazy simple to refinance. So
yeah. Most of the refinances we're looking at right now are conventional refinances where someone put down like 5 or 10% a couple of years ago. The values have increased, but not dramatically. So they're still, right around the 10% equity mark. So let's look at something like that real quick.
What's our average loan right now? What are you seeing?
The loan size?
Yeah.
Yeah, right around 435. So it's a healthy number, but that seems pretty average for people buying across the country.
Yeah, it does.
Let's just say like the value is 550 and they have 10% equity. And if they bought, a year, 18 months ago, they're probably right around 7.25. And I would think that they'd be right, just under 6 or so with the refinance. So let's just say it's in Illinois. Got to get rid of the promotional lenders. So right now it's just searching all the lenders we work with to see kind of what the rate is. 6 1/8 is safely what we're seeing. You can even open this up and see if there's other options, what it looks like to, so this situation here, 6%, you'd pay about $1,400 in loan costs. So might be something to look at, but the savings might not be there. But yeah, I mean, this is an average conventional refinance that we're seeing. This person probably would have a 7.25 rate.
Yeah, but let's get over to the calculator, because this is why we created this thing. Here's kind of the cool thing behind this. So I'm going to throw those numbers, the exact numbers that Alan provided, in here. So here's what that person was. It was about a $440,000 current balance. What was it? I'm sorry.
495.
495 balance. The average rate we're seeing right now is about 7.25 on a 30-year fix. Let's say they closed a year ago. Okay, so it'll analyze what their payment is. Okay, so now what Alan was saying is they can refinance right now, probably about 6 1/8, and we're seeing closing costs. This is another area you really have to focus in on, is the closing costs. A lot of times the closing costs, all you're going to have is title and appraisal. So it might be like $3,500 if you're working with us. Okay, so we're going to throw this down. That's going to say, okay, what's this going to be? Well, it'll save me $365 a month. Fantastic. You go down through here, and how much is it going to save me? It's going to save me $131,000 in interest. But if you continue to pay the same payment, let's say, for example, and I always ask this to clients, I'm like, are you comfortable with the payment? And if they say, yeah, I'm like, well, check out this. If we actually apply that, you keep making the same payment, you realize you'll save $160,000 in interest because of that. Now, you don't have to. You can take that out and say, well, I don't want to do anything. And then you can recalculate it. It'll go back up through here and say, well, okay, well, you could still save $132,000 by refinancing. Even it might not seem like, that payment or savings is extremely there. But then when you look at it this way, it's like, wow, that's a lot of money I can save. So just an idea, and that's why we created this calculator. But Alan, I'll bring it back to you, my friend, so you can pop back those rates again. Okay, so that was a great scenario on that.
I like that calculator because it does show you, if most people, if they're on the fence of refinancing or not refinancing, they're comfortable with the payment. They just want a better deal.
Right.
And, if they can cut off 10 years off your loan, that's going to save a tremendous amount of interest.
Absolutely.
Over the life.
So let's show them an FHA loan. Explain if you have an FHA loan right now, what's the process?
Yeah. So if you have an FHA loan right now, it's very, very simple to refinance and save on your interest. There is a streamlined program where there's no appraisal needed, no income documentation needed. There's no verification of that. It's just basically if you're currently making your payment and the new loan's going to be saving you money, they don't need much to approve that loan. So we're seeing quite a bit of those as well. But that would be something that I can pull up here. Streamline refinance. Let's leave the same. Well, let's just say the loan's a little bit higher. I don't want to run into high loan amount issues. So 456. Let's say the borrower is 660 credit score. let's see what this comes back with. I would think 5 somewhere. Yeah, look at that.
Look at that.
5.625, and they're giving a rebate of $2,300.
So we have a lot of people on the fence. They're like, I wish I can get a rate in the 5s, and you don't realize you possibly can, especially if you're looking at an FHA, a VA, or possibly a USDA loan. Now, when you're getting the conventional loans, they are right about 6%, a little bit over. But if you have a really good credit score and low loan to value, it fits. So how much what I've been trying to do each day on the morning opening bell is provide people like the mortgage bonds for both, how we always go over, where the MBS market is, but the Ginnie Mae bond started to publish. So I'm now going over those. What is this like, for example, if you have a VA loan, now we're picking up a lot of steam is people that have VA loans. I thank you so much. I don't know how you found us. But I'm in a VA loan right now, and I got two dilemmas going on. One right now, I'm like, okay, my rate's at 7. Can I do much better? And I bought the house in 2003 when rates were pretty bad, and I got some debt loaded up. Can I use my equity to pay that off?
Absolutely. We're actually seeing quite a bit of veterans look at doing a cash out refinance, whether to pay off some debt or even to do some home improvements. A client yesterday we were looking at actually was going to lower their rate, take money out, about $25,000 of bills to be paid off, and our mortgage payment was going down. So if you're a veteran that has some debt and equity, I would think that if you're going to be staying there for a little bit, meaning like 2 or 3 years, you might want to look at that, because you're going to save an incredible amount of money on interest compared to what you're currently paying on, credit cards. Incredible amount. So that is a great loan program, and there's no mortgage insurance. So
what's the rates looking like?
You want to see?
Yeah.
Let's take a look.
Let's check them out.
VA cash out refinance. Let's say 95% loan to value, 700 credit score, Illinois. I would think in the mid 5s still.
Really? Cash out. Wow. You're 95% cash out, and you have a rate in the 5s with no points, no even getting somewhat of a rebate. That's nuts. And then you see, a lot of these credit cards. Here, I got a story to give you guys. I told Alan this the other day. Okay, so I went out and bought as a homeowner, you have to buy stuff for the house every once in a while. So I've been in this house for 25 years, I want to say. Our refrigerator went out. It was like, okay, we need a new refrigerator. Well, it's this built-in thing. It's a nice one, and it's a Sub-Zero. So we go to this store that has Sub-Zeros and things like that. They look up a model number, and it's 36 years old, this refrigerator. To make a long story short, I had to buy a new refrigerator. Well, they have free financing, that 12-month term stuff. So I'm like, it wasn't a cheap refrigerator. So I apply for that loan, and I get approved, and then I'm signing the things, and the interest rate came up, and hold on to this one, 34.95% was the rate, and I'm like, that can't be legal. So how these work, just so you guys know, public service announcement, make sure you pay that loan off before it goes to that 12-month and a day. If you don't, what they do is the interest accrues all the way back to the day you bought it. And think of it at 35%, it's nuts. So, okay, that's my rant for the day. But that's what. Hey, another public service announcement. Alan, you explain this one. Hold on a second.
I'll try.
Hold on, you'll understand what I'm talking about. Right through here. How many calls are these guys getting if they don't sign up for this thing? It's crazy.
I've heard 30 to 40 a day.
I did too.
For about a week straight. They're worse than debt collectors. Yeah. So
it's nuts.
Yeah, they're leeches. You definitely want to sign up for this. It's like a do not call list for credit inquiries. So if you have your credit ran to see if you can save money, you're not going to get bombarded with these people calling you.
We
and it's
didn't
free.
create this thing, folks. It's like the do not call list for your credit. So what happens is when somebody pulls your credit for a mortgage or a car, your credit's going to get sold to 30, 40, 50 different places. They're going to call you and call you. Yeah, the guy the other day, Alan was talking to him. He got off the phone. I called the guy back. He did answer. And I was like, dude, you didn't listen to me, did you? And he's like, no. And I was like, you got to do a testimonial for me. He's like, I had 35 calls today so far. I'm like, that's nuts. So that's a public service announcement. So we don't own this thing. We don't have anything to do with it. Just make sure your data doesn't get sold all the time. What else do we have? Do we have some questions here? Let's see what we got here. Alan, I will leave these. Let me pull up your rate sheets. Hopefully we have somebody coming in, checking out, see what kind of rates they qualify for, but let me get to any questions that we have. So I will get to the first one. Let's see who we got here. It is, I just talked to lender in your website. Okay. For refinance. Was it, well, the good news is, and you have Alan on the phone, or Alan with us right now. So Alan is right through here. That's why I started doing this on Wednesdays with Alan, folks. Folks, I've been doing this for 35 years. Me and Alan been working together since 2005, I want to say. So a long time. So I wanted to start introducing him to you guys. So when you call in, most likely you're working with him. I'm right down the hall. I'm educating you guys. And then once you're like, okay, I really need some help, you talk with Alan, him and the team get it together. I'm always here, and I'm always bouncing stuff off of each other. So thank you so much. Now you kind of are introduced to the both of us. If you start getting spam stuff from me or Alan or whatever, I apologize. We have IT working on it. We don't know what's going on, so my apologies about that. But if anybody else has any questions in regards to what you want to run some rates on, Alan, it's coming that season, and it's going to be purchase time. So for people that are looking to buy a house, this might be loan officers out there. You might be a loan officer team, or you might be a brokerage team that follow us. If you're interested in how we do this, how our bank does what it does and so forth, reach out to us. We would, if you're interested as a team. Alan and I aren't looking to hire anybody, but if you're looking as a team to kind of set up something like we have here with one application, one credit pool, over 30 lenders, reach out to us. We'd like to talk to you a little bit further. But it's purchase season. So you got, how many did you get 3 or 4 contracts yesterday?
We got 4 yesterday.
So what's the average of that you saw, let's say just yesterday? Let's is conventional, FHA, a mix?
Yeah, it was, yesterday was a mix. It was 2 FHAs and then 2 conventionals. So we are starting to see a little bit more, I would say, towards conventional. But
run a scenario if you would, because a lot of people, I just posted a video. And the reason why I did it is people still think you need 10, 20% down. Most cases, if you're a first-time home buyer, 3% down. So if you're a realtor, I hope you know that. Do you realize also as a realtor, just helping you out there, if somebody's looking to buy up to a 4-unit building, you can go FHA, you can go VA. Realize you can go VA with 100% financing on a 4-unit building. Another program will allow you to do that. I'm just going to throw some tidbits out there for you guys. So,
yeah, I mean, a lot of what I'm seeing are conventional borrowers that their income meets the home ready limit, which is in a lot of areas is a pretty good income. So, if you're a first time home buyer, or if you're even, second time home buyer, but you're still, your income is about 80% of the area median, you do qualify for a discounted rate, which makes a lot of sense if you're going for conventional. So let's look at that real quick. Gonna mark that. Purchase, let's say they're looking to buy $350 and they want to put down 3% down payment, which would be the minimum, which is actually less than a FHA loan by a little bit. Let's say their credit score is 694. They make about was that 84,000 a year, somewhere in there. They're buying in Illinois. First time home buyer. Let's see what we got.
Hold on. Oh, man. Oh.
What's up?
No, I was gonna play a I didn't mean for you to do. Did that happen to you?
Yeah.
I was just joking. I was like, I want to do a little quiz. What do people think the rate could be down below? Oh, the whole server just went down.
Yeah, let's see what we got.
Oh, that's good. Hold on for a second. What do you guys think? Hopefully the rates work with us. This system works with us for a second. If you guys would post, what do you think the rate would be? Do you think it would be 6, 6.25, 6.5 points? No points? Let us know. Somebody. See if it's working yet.
694. $7,000 a month. First time home buyer.
And hopefully we didn't collapse the system.
Let's see. Look at that.
Look at that. That is nuts.
So if you're looking at a conventional loan or an FHA loan, in this situation, you would be better off going conventional because your mortgage insurance is going to be a lot less.
Yeah.
And your rate's not that much higher than an FHA loan. So we're seeing a lot of conventional pre-approvals, and the sellers really like conventional pre-approvals because, for whatever reason, they think that the appraisals for FHA are a little bit tougher, and that's really not the case. But, a conventional offer is always stronger than an FHA offer.
Alan and I met with I wanted to throw out there, if you guys are, let me know what you are. If you're a realtor, you're a loan officer, or maybe you're a home buyer, homeowner, just let us know. You can make any acronyms you want on the side or whatever. But here's an interesting thing. Alan and I met with a local realtor on Monday morning. And we usually don't meet with a lot of people, but we were like, hey, we know this guy. Let's go meet with him and see how business is going. It's locally in our area. I live in St. Charles, Geneva, Batavia area in Illinois. And we met with this young man, and it was wild. He walks in, we start talking. He's like, we had our best month. Did he say like ever or since COVID or even beat COVID?
Yeah, he said prior to COVID. So
yeah.
I think he had like 4 contracts over that one weekend.
Yeah, and they had 20-something closings. Now, he's a fairly decent-sized team, but you're talking in the suburbs of Chicago. So home values, he said, are holding up tight. The purchases are going crazy. He said it's the craziest he's been in a long time. So when you start hearing a lot of these videos of people telling you the world's ending and so forth, that's why we come out each day and at least provide you this information. So, we try to come in each Wednesday to show you kind of behind the curtains on exactly what we do. And that's what we hopefully you can learn each Wednesday. And we would wish we had a little more participation from you guys, but we understand you're working during the days. But if you're a loan officer, realtor, or something like that, reach out to us. We'd love to help you. So let me just recap kind of some things that's taken place today. Mortgage rates really aren't moving. The government came out of shutdown mode. ADP came in with payroll numbers this morning that's like, okay, those are pretty dismal. But the markets, the overall markets right now aren't reacting that much. Oil's rallying. This isn't, oh my goodness. I apologize. I didn't have my screen on the screen. I'm trying to recap the day for you guys. Okay, so my apologies right there here. If you got a rate that's over 7%, please give us a call. Even if you're in the high 6s, we just showed you how maybe you can save some money. Mortgage rates today aren't really moving much. There is a lot of action going on. Iran, I think we just blew off a drone of theirs. So now there's getting tension in the Middle East once again. Oil prices are jumping. That's not going to help the inflation front. You go over to this. Here's what I'm going to make sure you guys know. We have a lot of calculators in here. I don't care if you're a realtor, loan officer, use these tools, folks. I've been doing this for a long time, and I finally said, you know what, we're paying, I don't know how much Alan and I pay each month for these subscriptions. Some are 100, some are 200, some are $300 a month. And that will give you some stuff, but it's like, what tools do you really need? Hopefully they're there, folks. And if you need some other tools, reach out to us. We have a lot in production right now. If you're a homeowner, check out some of these things that we just posted. If you're self-employed, how much income do the banks really use when you're trying to qualify? We got it. Reverse mortgage. We just did that recently, a video, and I'm actually posting like a little commercial out later today for you guys on this. people don't understand reverse mortgages, and the list goes on and on and on. So check it out. There's tools there for you. Use this. This is one of the primary tools that I want you homeowners to use, even realtors, loan officers, to educate your clients on this stuff. And then please make sure before you call us, before you buy a car, before you buy a house or refinance, you got to opt out pre-screener and make sure they don't sell your financial data. Otherwise, you're going to get calls from 30, 40, 50 different places. It'll drive you crazy. So that's our report. I wish we had more people. Alan loves doing those rate quotes, but I guess we're going to have to do it offline because we need more participation, folks. So if you're a realtor, please spread the word. You're a loan officer and you want questions or you need some questions, reach out to us. Also, one last thing. On our website, we have a new tool right on the side of there. It's a bubble. Ask it any questions that you want, and it'll answer everything. Every product that we have is built into that engine, so please use that website. So other than that, if we have any other questions, I'd love to answer those. What do we have here? Where are refinance rates at? Here, let's bring Alan back in the mix. And if you want to, we just went over those a bit ago. But who do we got here on here? We have Derv. Derv, give us your scenario if you don't mind. We got another one coming up. Okay, here they're starting to flow. All right, Alan, you take over from here, my man.
All right. Where are refis at? I don't know.
Let's get to this one.
Okay. 660 score. 50% down. Okay.
While he's looking it up, if Derv 2747, if you would give us your basically your specs, meaning your credit score, loan amount, home value, income.
9580. Yeah, so this we would need the zip code, but I can go off of just a general one for right now. So this would be a conventional loan with the 660 credit score. There's going to be some adjustments, but wow, less than I thought. 599 for this gentleman here with the 660 credit score. That's pretty impressive. So under 6.
Yeah. How? I'm even scratching my head on that one. So there's what you got, folks. So he just did it live. He showed you what it is. He got a zip code. See if the zip code changes everything. It shouldn't.
What is the zip code?
17520.
Okay, let's see if it even gets better. What happened?
I know that's a head scratcher again.
Yeah, it is a head scratcher. I would think that the second time the rates were more accurate.
You do. That looks more accurate. I wonder why. We apologize about that. That's why we're sitting here scratching our heads. Why did that come in so low? We're here for you. But he just scanned the whole country and something was not right in that one.
Yeah, I'm thinking it might have been the zip code.
But why would that make... change it back. Usually you don't have... I've never seen that before. A zip code adjustment? I mean, unless it's a big loan or something.
Yeah, that's odd. There it is.
That's nuts. If you will you
there's a state adjustment. I'm wondering if that's why. Wow. But in any event, I would think that's going to be closer to that 649 that we saw earlier with the 660 score. FHA, you're probably looking in the mid 5s.
Switch that to 760. He said his mistake. He meant 760 credit score.
What was the zip code, Dan?
It is 17520.
All right. I think the income's over the limit, but this thing will catch it if it is. Yeah, 6, probably a little under if you want to pay a little bit of money, but let's take a look. Yeah, $224 to get $599. So that's an outstanding offer.
That's wild. That is wild. I'm glad you checked it twice and 3 times. All right, let's get to the next one. If you guys got any more stuff, let us know. It's David's scenario. Have you talked to David? Oh, David from above. Property value $530. Looking to refinance about $350. $350 loan amount. Credit score 780. No other debt.
$530.
And income, you're going to be way over $200,000 in Arizona. Thanks, Derv.
What was the loan amount, Dan? I'm sorry.
It is $350,000. And no debt, so it just rate and term.
Yeah, so this is very, very similar to what we were talking about earlier. He's probably around 7, and it would be, might even get to 5,875. Let me see. That costs $70 to get to 5,875. I would definitely do that.
So here's what Alan's showing you. Scroll a little bit if you would. This is kind of how rates work. We can't, like when people say, oh, you charge me a higher rate, you're making more money. We can't. We can only make X amount of money. So these things, if you see money in the green, that's rebate money back to you. If you see money in the red, that means how much it would cost you to get the rate. So when you ask, well, how much would it be to buy down my rate? Well, you also have to, every lender is a little bit different. So many times when that question gets aroused to us, we're like, well, it depends on the lender. So everyone has their own little spreads on all that stuff. So just so you understand how that part of it works. But this is where the calculator came in. If you guys are coming in late a little bit, we do have calculators. They're down below. We just posted one today. It's a refinance calculator. And you plug in the numbers. You can just plug in where you are now. With them, give us a call, send us, some things. We can give you a rate quote, run the numbers. And you can even run that saying, okay, I'm comfortable with the payment as is. You'd be surprised how much money you save in interest by just keep making the same payment. Even if you do a refinance that's, 3/4 less, by sending in an extra $100, $200 a month, it's crazy how fast you can get these things paid off. So that's why we created the calculators, and that's why we're here every day to help explain to you guys or hopefully, what's going on with these things. So is there any other questions? I'm sure we have more down here. Let's get to another one if you don't mind. Let's see. What do we got? 550. Can you do here we got another one. Let's see. Can you do a $490,000 refinance? $170K a year. 771 is the credit score. It's $170,000. Looks like they're looking to refinance that property. And Go the Sniper. Is it your primary home? Are you just looking to do rate and term? Are you looking to pull out any money? Because we just went through a scenario previously, didn't we?
Yeah. Yeah, that's a bad echo. Okay. I don't know if that is the 490 is the loan amount.
And let's say 490, do 490 refinance, $170K a year. We're gonna need more. We're gonna need more information from you. Let's see. Don't have it. Thank you, you guys. Thank you guys. One more. Let's see what else we got here. So maybe we just need to do these longer. People can start finding us. Can you see that one?
Yep.
All righty. I don't mean to be screaming in my microphone.
Credit score 830, 89084. This looks like a purchase. 550. 20% down. Pretty cookie cutter.
Ego, what loan amount are you looking for? This is another one, Alan. that they were doing. If you can give us what loan amount you're looking for, we think the value is 490. You make 170. We need what loan amount are you looking to refinance, or was that given previously?
So this one is 6% for this this scenario here.
Now look how expensive. That's crazy, because the other one was, remember we saw one was like $70, and now you want just a little bit lower rate. Yeah, no, what I'm saying is this is a perfect example of, now you have somebody that just a little bit of an adjustment in the rate down, $2,200. The other one was $70. So this is how, we'd like to explain to you guys, every little adjustment can mean, money in or out of your pocket.
Exactly.
So we got Ego. What loan amount do you need? We got a 490 value. Can you do 490K refi? We need your question completed. Let's go. I thought we had Ego up here. Maybe we did. Yeah, 6.25. Ego, I just not sure. Okay. Well, if you need some assistance, we would love to help you out. All you need to do is go to the rateupdate.com. Here, I'm going to go back to my screen. And there it is. So, folks, my name is Dan Frio. That is Alan. He is my business partner. We've been doing this for a long time together. I've been doing this for over 35 years. I'm the host of the Rate Update, and hopefully today you learned a little bit more about interest rates. If you need some help with a refinance, we created a tool right up through there. It's called RateWatch 2.1 AI. I don't know why we're not getting a lot of people putting in their information in there, because I changed it from RateWatch 2.0 to RateWatch 2.1 AI because we upgraded it, and I started to kind of teetering off. So, folks, I still monitor this daily on my own, so don't worry. We don't sell the data. And we're actually a mortgage lender. We're licensed in all 50 states as well as Puerto Rico. The slogan we have is one application, one credit pool. We're going to compare your loan over 30 different lenders. And hopefully that's what we explained to you guys today. So I will not be back at the closing bell, because hopefully you got a lot of information today on this. But please check out the calculators down below. If there's some that you just kind of think, okay, that would be a cool one, let me know. I'll try to work on one for you. But if you need some help, if you're looking to refinance, looking to buy in the spring, looking to build, I'd love to help you out. So, folks, my name is Dan Frio. His name is Alan Platt. We're here to help you. We're the hosts of the Rate Update, and we're also licensed mortgage loan officers in all 50 states as well as Puerto Rico. We will see you next week. If you need some help